Welcome to TradeTheMBI.com. This is John. This report is for the 11th, and we're looking at the daily right here, and again, we're still seeing more of this same flatness. What's really interesting about it is, particularly if we dip down here and I expand the DOC, the D Omega converted right here, and we can see that the cyan well below red, which indicates there are like no shorts. Now, we had a brief stint where short-term buyers right here in the steel have fallen below the cyan, which usually is a little bit of weakness, which is exactly what we caught right up here on the previous day. And now we're getting the cross back the other direction, so we should see a little bit of a uptick lift. We're not overbought in any sense, but the problem with this, and I've talked about this before, is when you're this deep with the shorts not active in the scenario, once they do activate, you have a potential for a much bigger downdraft. I think that well, last time we ended up with a dip below the 7.5 right here in the cyan. You can see it was right about here. Everything looked, blasé. Slightly lower highs at that particular point. We were still at peaks, and then boom, we ended up with a significant little downdraft as those shorts activated. Once the shorts get in there, that short covering rally is usually the one that gives you the nice impetus push. So you might expect a little bit weakness here. We need to see it get down to the 7.5. If it doesn't, then we could avoid it. But once you, last time we had it also right here where it dipped back, and it didn't produce much of a decline. I mean, we only went down to 2,228, which not from the peaks, not horrible from 73, but still that's 50 points. It's enough. But it's just worth noting. I mean, I don't see any horrible signals on the horizon here. The NQ still outperforming and actually making higher shakeout readings. So we've reached back to the morning level peaks. Again, likewise, same readings with the cyan under the red. Positive from a bull standpoint. And the Dow still a little bit weaker than both, but nonetheless still possessing the same cyan under red, but literally right at the precipice of turning back over and overbought a bit. So we can see that rally from the industrials is backing up just a little because there's still no definite plan on some of the reforms or stimulus spending, and whether it will hit roadblocks or not. It's going to take a while for that to work itself through. So the market might have got ahead of itself a bit. Not uncommon. On the euro, and just outside that range, again, they're going to keep trying to float that. Whether it will be sustainable or not is the problem for them. Particularly when you start to look at bonds, likewise, also difficult. If there is any improvement in the U.S. Real data coming forward, particularly in, once the inauguration happens and there are dramatic changes, that really could put significant downward pressure. And this also is problematic from an inflationary standpoint. Again, they're going to have trouble holding this up simply because of the amount of supply. There's going to be all sorts of cheating going on now with Iran involved, and it just a glut of oil is not a bad thing. It means that the impetus for growth is available at low range, but when you get into a little bit lower here, it becomes problematic from a deflationary standpoint. It's a delicate balance. Got to be maintained. And gold is going to continue to be a haven as uncertainty starts to increase, and I think that you can expect to see that happening more. And there's a significant range for gold to move back up to, so it's got the potential for solid gains without really compromising any growth or expectation that inflation is out of control. Here we have the 5K. This was an interesting one because of some of the changes they've been working with on this algo, where it had flipped correctly to the green. The difficulty was in the assessment when the orange came in here for what should have been the start of a little short, adjusting the color based on some other parameters and working out the language on that right now. But clearly you can see that we're going to get these buy signals in that. But if I shrink this chart, you're going to see how the range really hasn't been that significant over the last couple of days. I mean, we can go to the bottom side is where we're at right here. And we move back to the peaks, we're right back at the top. And so we're just basically in a small wave. I wouldn't even say positive action. It's just sort of in between. So nothing too spectacular, but that we're getting to these extreme points with not much price rise is really the issue. It's becoming one of those where it's hard for longs to push things through. From a 50K standpoint, we can see the beginning of the year. Started with a couple of the little longs there. Now it's in another long that's going in through here with the reset. It's got to push its way back up for that to happen. We did have, I don't think it would count in this year's totals, because it happened at the very end of the year on the 30th. We ended up with the buy signals from the NBI, and it pushed to those wins right at the beginning of the year. Well, we can always look at the performance report. See where that comes out at. Pretty close up and near the highs. This irregular and somewhat trending market makes it a little difficult. We need stuff that's a little bit more erratic in order to produce more consistent return. But I mean, not that you can say that 2.4 profit factor, 76% win rate is not consistent. It's just recently, well, it did record it for this year so far, so 2 trades at 100% from that standpoint. It's just been back and forth these last, when the market manipulation from the Fed has really thrown off the normal cycle of things, and it's certainly made it complicated, and we've definitely seen it in the algo adjustment. We've been able to adapt with the more shorter time periods simply because it's I'm keeping that language tight to the market range, but there's been a lot of adaptation to this extra liquidity in that, and it I would say it's been, you know, some people think it's all so wonderful, but it's been a challenging setup with it because of they're unnatural forces, and those unnatural forces really are having an impact. Now, I think that potentially we're starting and we're going to see the period of normalization with that, particularly returning to pro-growth policies. The Fed's going to lose a little bit of control on maintaining low rates, and that will force an automatic correction of the market into its natural force. So that doesn't mean that they're going to have a price correction. It just means that the extent of the exerted control over forcing people into the market will wane, and that is going to create some challenges, because then you're going to have opportunities for yield elsewhere, and that will certainly have an impact on how things are traded. So just little macro things to keep in mind as we you know, are in this little sideways action of blah. So there you have it, the long, the short of it. Trade well. We will continue to post charts on the Skype chat. Talk again later.